We are back with JC Parets. JC, I want to get your take then in terms of what is working, what's been working for you, and what's not working in the market.
Yeah. When you look at a big pivot that occurred in the second half of last year is the dollar peaking. We could date that back to September the 26th is when the dollar put in its peak internally. That was when the British pound bottomed. Euro bottomed 2 days later. A couple weeks later, yen bottomed, emerging market currencies bottomed, and they've all been ripping ever since, and the dollar's been under a lot of pressure. So if you anchor back to that moment in time and you put a performance chart of the best performing assets and types of stocks or types of assets anyway since then, what's been the best? It's been precious metals, it's been non-US stocks, precious metals by a lot more, silver really outperforming in that environment. Those are the things that are working. And think about the composition of international equities. You don't have that tech exposure, right? A lot less growth around the world in all of those countries. The UK has 0% growth. 0% technology in there. So very, very little or no growth. And guess what? UK is pushing up against new all-time highs. The I shouldn't say irresponsible, but the obnoxious amount of growth exposure in US equities was a great thing for a long time. These days, it's a headwind, right? With higher rates, that impacts growth stocks tremendously, and you're seeing that underperformance. So, and by the way, it's not just like hasn't been working lately. It hasn't been working for a while, right? When the market peaked initially was February of 2021. That was almost 2 years ago.
Do you think, though, that we're going to continue in 2023 to see the underperformance of growth stocks? Or have they also bottomed? I was listening to a call yesterday from one of the big banks. Have they bottomed and they're already reflecting the concerns within the economy? Again, I know you're not fundamental, but you're technical. But are you seeing any kind of momentum or technical strength in some of the growthier areas of the market yet?
Yeah, no doubt. Facebook's up 50% off the lows. You're seeing massive rallies, anything crypto related, starting off the year with a bang. So a lot of things in terms of mean reversion taking place in growth. And I think it probably has legs, especially, considering they're the only ones that haven't been working. When you look at a lot of the other areas, when you equally weight the market, like consumer discretionary, for example, if you equally weight consumer discretionary, it's the best performing sector since the June lows, right? It's up 20% on an equally weighted basis. So you're taking out that Amazon and Tesla effect. Tesla's 14-15% of consumer discretionary. Is that warranted? Amazon's a quarter of consumer discretionary. So that doesn't tell the whole story. It tells the story that large cap growth stocks have been getting hammered. That's the story. So if you eliminate that and you equally weight discretionary, it's the best performer. That's type of stuff doesn't happen in bear markets. Industrials breaking out to new all-time highs. Look at aerospace and defense, truckers, railroads. A lot of strength under the surface. European banks were up 26% in the fourth quarter. Catherine, we've seen this story before. When the world's coming to an end, European banks are front and center, leading the march to zero, not breaking out to new highs and leading financials globally higher. Come on.
Okay, so let me ask you about financials, because I think a lot of our viewers own banks, kind of just stick with it, steady Eddie. How are they looking?
I think it depends on where you look. The regional banks have really struggled for the most part, particularly on a relative basis. It's really been the insurance stocks. Insurance stocks have absolutely been crushing it. Look at things like, Chubb and, some of the bigger names. Look at IAK, which is the insurance ETF. Look at things like Aflac and MetLife and some of those just absolutely crushing it. Look at the healthcare plans and providers, UNH and Cigna and things like that. Like those continue to do really, really well. So I don't know if it's like the insurance stocks and those like mega care, healthcare plans. I don't know if they're tied together, but a lot of strength in both of those areas. The reinsurers, Marsh McLennan, Aon, Willis, just continuing to push up against new highs. So that's an interesting segment of insurance, property and casualty, obviously. So within financials, and then the broker dealers also leading the way there versus things like regional banks, for example. And then I'll finish with Berkshire Hathaway. Berkshire Hathaway is the largest weighting in the S&P Financials Index. massive outperformer. Uncle Warren just keeps winning.